So welcome back to this YouTube channel. Today I will be showing you why personally this week has been the most easiest week for some months that have been trading, and I'll show you why. But personally this has been the best week, even if we had some missing trades and we had one losing trade. This was a very good and easy week. Price respected all our point of interest, it respected structure, and everything had been handed you over a platter. Okay, so using our strategy, this was a very good week. Why? Let me first show you. In the daily time frame, in the previous video, I had told you once we were at this point, let me mark it. Once we were at this point and price printed out this candle, then our main POI to target will be at this point. I hope you can remember. Those who have been following can see that in the previous video. And even when you are still at this point, I was still targeting this major point of interest. Why would I do that? Okay, because in our POI to POI strategy, POI, daily POI, push another daily POI price to a 4-1, can push our point of interest or a 15-minute liquidity. Okay, I hope you have understood. Now let's go to this other. Let me show you another thing. So at this point, you can see price came. Actually, if you look at the other charts, this was a very good liquidity sweep. On other charts, let me show you like this one. Price did not break with structure, with a body. You can see price did not break with a body, but this one is somehow not clean, and I don't want to delete those because I will do some back testing later. So this was a very good liquidity. So which other point of interest should we look at where price can be pushed to? It is also a daily liquidity. And where is the liquidity? It is at this zone. Okay, this was our next daily liquidity. And what did price do? It rejected price. It pushed. Price was pushed to this daily liquidity. Let me show you also another thing. Let me delete that. So on this zone, okay, we had a daily fair value gap. Okay, and the daily fair value gap is a daily point of interest. Where should it push price to another daily point of interest? But at this zone, we didn't have any daily point of interest. So that is why price pushed to a daily liquidity take. Okay, it pushed lower to sweep the previous day low. Okay, let us even see here. Like these patterns are repeating themselves again and again, and you just have to have the ability to see them before they happen, and then you can be profitable, and then your trading life will also be easy. You can see at this zone, this day, price came, tapped into this daily fair value gap, and also swept the previous day low. So where can price push up to another daily point of interest? But we didn't have any daily point of interest except this liquidity. So that is why it came sweeping to this zone. Okay, and after sweeping this zone, where do we expect price if it is a liquidity take? We expect price either at this zone. Okay, we can also expect it at this breaker. Okay, or even at this liquidity take. It depends. Okay, so let us look at another example. Okay, you can see also here, this gives you a good direction on what you should do on that day. Okay, because if you see that you are targeting a daily liquidity, therefore you are bearish, you will not be tempted to get in a bullish position for long term. Okay, maybe just a small reversal and then we continue with our trend. So here price pushed to a daily fair value gap, and where should it push back to? There was no good point of interest here, so it came to sweep liquidity. Okay, you can see these things are happening over and over again. You can see even here. And then after this, I want you just to go to the charts, mark this so that it can get into your mind. You don't learn by watching videos, you learn by exercising what you have learned. Okay, so price came pushed to a daily fair value gap also. And then where should it go to? It should go to another daily point of interest, but there was no daily point of interest at this zone. That is why it came also to sweep liquidity. Okay, you can see repeating the same thing over and over again. Here price came and swept liquidity. Okay, so we should expect it to go to another daily point of interest. And what did we have here? We had a daily order block. That's why it came pushing back to the daily order block. Okay, and after this daily order block had been respected, where else do we expect price to push to this daily liquidity? Okay, this is what happens again and again. Okay, so that is the daily POI to daily POI. Now you can try to go to the 4-hour time frame so that you can refine more and see if it still works like the daily POI to POI. So let's take an example. So price at this zone came to a 4-hour breaker. Okay, so a 4-hour POI pushes price to another 4-hour POI. So which other POI do we have on the 4-hour time frame here? We have a 4-hour fair value gap at that zone. Okay, you can see it is just delivering the exact thing over and over again. And after this 4-hour POI, if it is respected, where else do we expect price to be pushed to another 4-hour point of interest? Okay, you can see. And then this 4-hour point of interest resisted price. Where did it push price to another 4-hour point of interest? This 4-hour fair value gap. It is POI, point of interest to point of interest delivery. Okay, then again, this was a fair value gap, 4-hour fair value gap here. If we are bearish, where do we expect price first to be pushed to another 4-hour point of interest? Actually, I'll be showing you. Yesterday I told you about this trade because I was making the video, I think at London session. Remember, I don't trade London session, and so I told you that price can push to it and then sell heavily to our daily liquidity, but this 4-hour POI must be respected. Okay, so and then after price reached to this 4-hour order block, where did it then push to? It should push to another 4-hour point of interest, and that is the same thing did. Okay, let us look at the past data. What was also happening at this time, price was very bearish. It wasn't even going back for re-entries, all the gaps that it had missed there before. Okay, so you can see even at this zone, price came to a 4-hour fair value gap. Okay, where do we expect price to be pushed to? If it respect this, we expect price to push to another 4-hour point of interest. Okay, this was a 4-hour order block, and that is the same thing it did. And then after this 4-hour order block is respected, where do we expect price again to be pushed to another 4-hour point of interest? And this was a 4-hour order block, and price came, tapped into it, respected it, and then went down. So that is our strategy. POI to POI. It is easy as that. So that is the 4-hour POI to POI. I think I can now show you about the 1-hour POI to POI. So let us go to the 1-hour time frame. And look for those patterns that form. Okay, so where do we go? Yeah, okay, this is a good example here. So price pushed to this 1-hour order block. Okay, where do we expect then price to be pushed to? We expect price to be pushed to another 1-hour point of interest. And what did we have here below? We had another 1-hour order block, and that is what it did. Okay, let us look for another thing. Yeah, at this zone we had this 1-hour order block. Okay, and price respected it very well. So where else do we expect price to be pushed to? We expect price to be pushed to this 1-hour point of interest, 1-hour order block, or even a 1-hour liquidity. Okay, and that is what happened. Okay, so let me look for another one. Okay, we can also look at this one, the 1-hour to 15-minute POI at this zone. Okay, I don't really think this is a good example. Let us not look into that. But I hope you can remember we had already done this there before in one of our videos. Okay. Okay, let us look here. This was our 1-hour order block at that zone. And we had a break of structure here. So where were we expecting price to push to? Because it has respected this 1-hour order block, we were expecting price to push to this 1-hour fair value gap. And that is the same thing it did. Or if it doesn't push to that 1-hour fair value gap, then it can push to this 1-hour order block. Okay. Yeah. So that is our POI to POI strategy. For the 1-hour to 15 minutes, I've explained it in the first video that I was explaining about this strategy. So I hope you can just go to that video and learn from it. Now, I want us to talk about this trade that we had yesterday. Remember, in our previous video, we went through all these trades. We had one loss here, 1 win, 2, 3, 4, 5, 1 missed trade, another 6 win. So in that week we had 6 good trades, 1 loss, and 1 missed opportunity. So yesterday I had told you about this trade. Let's go to the daily time frame. Okay, we had tapped into, okay, let me first delete this. Yeah. So in the daily time frame, we had tapped into a daily order block, And also we had swept a daily liquidity. So where were we expecting price to push to? I've just told you, we are expecting price to push first to this 1 hour liquidity. Okay, so and on Thursday, price had come, tapped into the daily order block and had not engulfed the previous day candle. So on 4-hour time frame, what did we have? Price at London session had already come, had tapped into this 4-hour order block. Okay, then we mark it. Now, using our POI to POI strategy, where do we expect price to? If this was a 4-hour order block and it has been respected, then I expect price to push to either this 4-hour fair value gap that had been left during the session, or this 4-hour order block. We had 2 main points of interest, and personally, I knew they would be able to hold price. I'm not being a predictive trader by saying there that I'm still a reactive trader, but according to the experience that I have in the markets, this will definitely hold price. Okay, so during London session, price came to this point of interest, and you can see it was tapped into the 4-hour order block, but it's still respected this 4-hour fair value gap. So let's go to the 1 hour and see what is. Let's first mark our gaps that are the 800 to 50 so that you can know where to trade. Okay, and as you can see, what happened, price during London pushed up to this 4-hour fair value gap. So for me to confirm my bias of selling, what should I have waited? According to our strategy, we know that I should wait for 1 hour engulfing candle, or if that doesn't form, then we can wait for 2 bearish candle, or 3 bearish candles, so that we can have confirmation that we can now sell. Okay, but then what happened? Price came and printed out a very bearish candle. Actually, myself, I thought that this 1 hour candle will first come and respect this 1 hour order block so that it can give us an entry, but it did not. There was a a lot of selling pressure in the market. That is because of fundamental news, because yesterday we had NFP. Okay, and I wouldn't have come to enter the trade before NFP. Okay, so on this candle printing out, I didn't have even the opportunity to go to the 15-minute time frame, because that will be forcing trades. And what happened after it continued printing out, it didn't come for us, for those who had missed entry at the seasons. It just continued on selling and even reached our main point of interest. So if that week you would have used my strategy and took a trade here and then holded it up to here, then you would have got a very, very good 20,000 pips. Okay, just using this strategy, and it is very, very easy, as I have explained. So that was all for the week. I hope you have understood. Go into the charts now and look at what I've showed you, and then make yourself something useful. Okay, so I would like you to like, share, and subscribe. It's the gold addict. Thank you.